What is going on, trading family? So, we're going to have an extremely important trading week moving forward. We're going to have multiple rate decisions. Also, over the weekend, we got some very important headlines that came out between US and China and how we can move forward with these headlines and also how to predict the next move. Okay. Looking for trade ideas also in the markets. I want to help you guys with everything for this weekly prep. And hopefully, you guys enjoy this. Give me a like and also subscribe. Please give me a like so other traders like you can find these type of videos to help you in your trading career. Okay, guys. So just in case if you guys ask, right? This is my Discord community for my private group. Okay. So I already did a breakdown with trade ideas for the members already. So for you guys, I'm just going to give, just the key things to really focus on. But if you are interested in being a part of our private community, which we have everything in here, we like you can see we got the group gold chat, equities chat, currency chat, just so you guys to see the testimonies of the members that are currently winning every single day, passing prop firms, actually getting withdrawals on a daily basis. This is what we go through. We focus on fundamentals. We pay attention to economic data. We pay attention to news events, headlines. So everything you need as a trader is going to be in this group. And also for you guys, learning the course, right? So if you want to learn fundamentals, you get access to the fundamentals course as you become a member in the group as well. If you want to learn it separate, you could pay for it separate, but you could join me in the live calls that we do all three sessions when there's important economic data. Everything that you need is going to be here in this group. If you guys are interested, link is in the bio. Okay, so let's move forward with the weekly prep. All right. So this week, I'm just going to talk about the top focus for this week. Okay, the key drivers. We got the Fed rate decision. So the Feds are expected to cut rates by 25 basis points for this meeting, which is already expected. But we're going to focus on the dot plot and also the language in the balance sheet, right? How is the liquidity outlook? We already saw that the JP Morgan is already expecting the Feds to end QT this week. Okay. So that's one of the key reasons we're seeing equities is pushing higher, right? So we're going to be focusing on that as well. I'm going to be trading that live with my private group. So if you guys want to have a better edge into this, trading it live with me as well, join the private group. Okay. We also got geopolitical tensions, the US and China de-escalations. We had some positive talks on tariffs, right? The reduction in tech corporations are easing sentiment. So at market open, when you guys, we possibly could see a risk on market because of those headlines, right? Lowering trade tensions, it lowers inflation risk, right? More confidence in risk assets because with these high tariffs, it's inflationary too, guys, and we got to pay for it. Okay, so that does help the inflation risk, but we still have to pay attention to sentiment because these things are fragile. They could change their tone any moment. Okay, so we could see that there's optimistic now, and then China could say something in the next 3 hours, being like, "Hey, no, we're this ain't the way that we want it to go." Trump could just change his tone any second. We should be used to that, right? So just be prepared for that. Paying attention to news headlines. I get the question, how you get the news headlines? It's here in the private group as well. All right. So economic data we have is going to be important this week. We got labor and inflation is still the main focus. All right. So I'm going to talk about that in a few with you guys. All right. So most of this is for the private group, but let's go right here for key events. Okay, so Tuesday we got the Australia CPI data. So inflation is a very important indicator, especially for the Reserve Bank of Australia, because whatever direction inflation could go, it could impact that AUD pair. So if you guys love trading AUD, this is a good event to start looking for some really big reactions. All right. Wednesday, we got the three major rate decisions. We got the Federal Reserve. We're expecting cuts already, right? Bank of Canada, they're expected to cut too. And the Bank of Japan, they're most likely going to leave rates the same. Thursday, we got US GDP along with the ECB rate decision. I'm not sure we're going to get GDP data, but the ECB, we got to focus on the tone of the actual rate decision. And then on Friday, we got US core PCE, which is inflation as well. This is the Fed's preferred measure of inflation, but the lockdown is what's going to be extremely important moving forward, right? Because that lockdown is not giving us no tone to focus on. And talking about the lockdown, because I get asked this a lot. So right now, the markets is not reacting because investors still see this as political noise. But heading deeper into November, the shutdown will begin to affect people and data. Okay. Key government programs are already slowing, but as long as the shutdown drags on, economic impact will rise. All right. So market insight, short term markets don't care. But midterm, right? If we see this continue to last, medium term, we're going to see delayed data. Uncertainty may enter to volatility. Okay. Markets don't like volatility. Longer the shutdown, the growth risk will increase. Then we'll possibly start seeing a risk off environment. Okay. So if the feds can't see data, they must act more cautiously, right? Extending the shutdown, this should support gold. We're going to see safe havens rise. Equities could get weaker if this continues to start dragging on to the economy. All right. Because this is important because even with I'll just show you guys here because with the Fed rate decision, right? We got to focus on their language. And like I even had it here for the private group, but the government shutdown delays economic data, right? The feds loses their visibility. This could lead them to a cautious tone, right? Which could be hawkish if this actually starts impacting their decisions that they make every single day. So this is what's going to be a real focus, all right, moving forward for this rate decision. And again, right, just to make it easier, you got to focus on the tone, right, which is going to be an opportunity for you guys moving forward. That's why it's important. Another thing I want you guys to pay attention to, right, is because I talked about it in a course for you guys in the previous videos on YouTube. Something has to break in order for the feds to change their tone, right? In order for them to change the macro projection. And leaning out of QT, we need something to break in order for the central banks to start stimulating the economy again. One of the focus is the banking sectors facing rising credit defaults and slower lending. When credit tightens, growth slows, and recession risk can rise. So this is one of the indicators that we're getting, right? People ain't paying back their loans. Higher rates, people is not taking out more debt, right? The fact that the economy is built on credit, and we're seeing that credit is not pushing out. People ain't paying back their credit. People are struggling, right? Growth is slowing. This is what hurts the overall economy. This could hurt the banks, right? So we got to pay attention to when it was banking earnings. Let's see if we could get some actual signs, right? If we see more stress in the banking sectors, this is where we could actually see that the Fed start acting more aggressively, right, towards rate cuts. We could see them cutting rates because of recessionary fears. This is what could actually change the overall picture. So we got to focus on this moving forward. All right, guys. So hopefully so far that is helpful. We got earnings this week, which is going to be very impactful with the earnings that we got. UPS is a good indicator, right, to see growth, right, to see if like people are buying and spending, right, people is getting their goods. We got Boeing coming out on Wednesday, which is a good focus. US 30, Boeing is in there. We got Meta, Microsoft, and Apple. Okay, so we got tech this week, along with Amazon and Google, right? And we also have on Friday, we also have oil earnings as well, gas earnings. So very important week when it comes to earnings, especially for NASDAQ. If we see that these earnings take a hit, which is probably highly unlikely, but you never know. If we see earnings do take a hit this week, that could be a start indicators, right? That things is not looking to be as great as what they anticipate. If we continue to have very strong earnings, just supports more upside for the stock market. All right, guys. So let me just give you guys a little taste on what to expect, right? Because by the time you watch this video, hopefully it's before gold open. These headlines is optimistic, right? So, but still, don't just take a trade immediately, right? Because we still need the markets as a whole to react, right? So far, if we see that the China and U.S. tensions are easing, we want to see a risk on market. So we would like to see AUD, NZD, and CAD push higher. We would like to see dollar, yen, and the Swiss push lower. That's ideal for a risk on tone from just the currency space. Then we would like to see the stock market start to rise, right? Equities as a whole push higher because then that's another indicator, right, that we're seeing a risk on market. If we see all of that happen, then what you ideally want to start seeing with gold, right? You want to see gold breaking below these key areas of support and pushing lower, right? Because the optimism of trade between the US and China could push gold lower, right? Showing de-escalations. Short term, not long term, because like the reason why I say be cautious because we still have a lot of reasons for gold to still push higher, right? We still have overall uncertainty. We got a dovish Fed, weaker dollar, weaker yields, right? So we still got a lot of uncertainty, but this could cause a temporary shift in sentiment. So if we could hold below that 4,100, that could be a good indicator to look for sales. The safer sales could be if we break below that 40-50 zone, maybe pushing down to 4,000 could be a good target. If we get it, hey, we don't know how it's going to act at open. We could just see that equities just like gold just melt right away, right? Probably gives nobody an opportunity. But sometimes, you know, we could probably be a little more patient until like 9 p.m. Also, probably London session at 3 a.m. We could also not see no reactions until New York session, right? Because they want to get involved. So just don't aggressively enter trades. Try to be more patient. Wait for a perfect edge, right? Wait for the markets to prove to us that it cares about the news and then take advantage of it. All right, guys. Hopefully this is helpful. Again, if you guys want to trade live with me, if you like this type of information, you want access to a fundamental course, link is going to be in the description. Also, you can message me on Instagram if you have any questions. All right, guys. Hopefully this is helpful for you. If you guys, again, if you guys have any questions at all, send me a message. I'm here to help. Have a good one, guys. Enjoy.